Lesson 13, Introduction to the Cash Flows. In any business, there are three major types of activities. Be it a brick and mortar business or an e-commerce business, all business activities can be classified into three types. The first one are the main business activities, that is, the main purpose for which the business was actually formed. So in a real estate selling company, the main business activity is buying and selling of property. In a bank, the main business activity is taking deposits and giving loans. So the main business activities is one of the main activities of any business. The second type of activity is investing funds. Most businesses have surplus funds which are usually invested either in a capital equipment or a fixed asset for future expansion, or kept as deposits or investments in other money earning instruments such as mutual funds. So the first activity is the main business activity. The second activity is investing activity. Investing can be of two types. Investing could be in the form of assets or in the form of money or deposits which earn money in the future again. The third type of activity is financing activity. Any business needs money to run. So financing activity represents money inflows and money outflows for the purpose of capital. So therefore, your equity capital, payment of dividends, loan inflows, loan outflows, and interest payments all get classified as financing activities. Let us look at some examples. Cash generated from selling goods. It is an operating activity. Operating activity here refers to the main activity of the business. Cash paid to vendor who supplies goods. Again, this is related to the main activity of the business and therefore an operating activity. Loan taken from a bank to purchase an equipment. So since this is a loan that is being taken from a bank, it is financing in nature and therefore a financing activity. Equipment purchased. So this is an investing activity because the money is being invested in an equipment. Interest paid on a bank loan. Interest paid on a bank loan again is relating to a financing activity. Salaries paid to staff. Salaries paid to staff is a usual day-to-day activity and therefore operating activity. Income taxes paid. Again, this is something to do with the main line of business and therefore an operating activity. In the cash flow statement, cash flows are classified into three activities. Cash from operating activities, which are generated from the business's main activity. Cash from investing activities, which are the cash generated and spent in investment of funds either in capital equipment or in money generating assets. The third one is cash from financing activities, which basically includes loans, equity, and so on. So cash flows can be divided into three broad categories. Operating activities are those that are the main activities of business. Investing activities represents investment of funds either in money generating assets or in capital equipment. And financing activities represents funding and repayment by debt or equity.